Hi there traders and welcome to Trade the Structure. Now I've got a quick video for you. I wanted to go through a couple of key aspects to trading. Well, I feel it's a couple of key aspects to trading. Now I've entitled the video planning, I've either got planning a trade or setting up a trade, okay? So ideally what I want to get through to you is why you should actually plan a trade and plan what you want to see. Now we all know if you've done a bit of trading for a while now, or if you're new to the game, what you probably will find out unfortunately is when you do start to get into a trade live, your emotions could really start to kick in, and emotions could really start to push you around in the market and start to make you see things that are not really there, okay, because you're scared of doing this or you're scared of missing out. There's a lot of different emotions that start to come at play when you're actually trading in live. So I think it's very, very important to plan out the trade in advance so you know what you want to see and you know the reasoning why you're trying to do it, okay? So you're not going to get flushed into a trade that's not there, to a buy going long when it's not actually long there, okay, or going short when there's no real sell there. The bias is actually up. So you want to know ahead of time where your levels are, your key levels that you want to trade from. That's the first aspect to really to look at. And then you want to go, okay, what do I want to see if I want to trade off that level? Okay, so I want to see this kind of price action. Sometimes the market can just, if you're looking for a sell opportunity, it can just rip down and you start chasing it down. But there could be a reason why it's ripping down. It's not actually getting set up to go short. It's actually a trap to turn around and go back up, go long again. Okay, so all this price action, the market does what it does for a reason. It doesn't just, whether it's trying to trick you or whatever it is, but your job is to really try to understand what it's doing, why it's doing that, and is that what you want to see or is that not what you want to see? Okay, for when you're, looking to get into a new trade. So what I'll go through, I've got a couple of different charts here. I've got some examples on the Seng. I've got the Dow, and if I've got time, I'll go through the yen. Oh, sorry, the Nikkei from trade from today. I actually didn't trade it, but I just saw the setup today, and we'll walk through that as well, the reasoning behind that. So kicking off with the Hang Seng, putting in levels. So what I've actually done, I've marked up levels coming into, that's yesterday's action I'm going to talk about. So we've got two sections of this. You've got yesterday's action, which was actually a long, and there's quite a few setups long. I actually took a short, did okay, and then took another long, did okay, and then called it a day. But it actually kicked off with quite a few different setups for the session. We're on the 5-minute chart to start with, but I've just shown you the key levels, and later on, you've actually got this action that turned around to the downside. So there's actually reasoning for both. All right, so you've got, firstly, what you've got. You've got this, a clear leg up in the market. So what's happening in that leg up? Buyers are stacking up. Okay, so sellers have been put under pressure. Sellers are jumping in, getting squeezed out. Sellers are jumping in, getting squeezed out. But what you're doing, you're building up longs. You're building up longs here, building up longs here, building up longs there. So what that is, when the market's in a trend a certain way, it's building up, that position. As in, more and more people are jumping on board, getting on board the long. So there's more and more juice or fuel that could be having to jump back into the market to get out of those positions. Okay, and that's what I'm generally looking at. If I'm trying to go with the trend, that's fine. I want to go from point A to point B. Okay, but if I'm thinking the trend is actually extended, and I think it's a little bit too stretched, if I'm not entered into the market, what do I want to see to get long, or what do I want to see if I want to get short? So I'm always doing that. I'm trying to plan those trades well in advance. Come into the session, marking up my key levels. Okay, I want to trade off this level. What do I want to see if I want to go long? What do I want to see if I want to go short? And it's a simple case of, say, doing this. That's your level there. Or let's just say we've got a level here. Okay, what I would be doing if I want to get short, I want to see a bit of a flush, and that's what I want to see. Okay, and I want to take action when I get that lower high confirmation. If I want to go long, say the trend up, it's actually stretched in there, so I want to be careful because I don't want to see it's extended into a level, and then I want to go and get long and finds out it rolls over, or I don't want to get short, find out it still wants to go. I want that market to show me what it's going to do. Okay, so ideally, if I want to get long, I might look at something like this. So you can see that there's a slight difference. Okay, the action is it's gone up, back down through the level, and as it's coming back down, it's retesting. You've got a lower high in place. You're taking basically the broke. You've boxed up that trade. Boxing it up, I mean doing something like this. You boxed up that trade, short down through the bottom, risk up above, and so on. And on this side, it didn't actually go down through the bottom. It starts to hold a higher low back at the level, and you're boxing up like that. It's as simple as that. Okay, so they're kind of the two scenarios I would look at for coming into a level or at certain levels, and how I want to trade around those certain levels. Okay, so we'll go into, bear that in mind, we'll go into a 1-minute chart here. Well, firstly, we'll just look at the 5-minute chart. So this is the open on the Hang Seng. This was from yesterday. Okay, you can see the market powered down. It looked like it was going to roll over, but what it was doing is coming into a certain level and starting to hold up. So if we just go into a 1-minute chart, so we can grab that for you. Oh, I'll have to just go back a sec. Here we go. So that's the same action there. Okay, I actually took this trade in here. I took that short, it came down, and I actually think I took another short here and then took a long a bit later on just in here. Okay, so you can see the market, it was powering down. So this is what the first sort of push down. You've got to pop up. Okay, so in here, that wasn't so bad. You've got the market starting to roll over. What I'm always looking for, okay, if it's bounced off the level, if it's going to go back into the level, there's a good chance it's either going to go back and retest the lows, or it's going to fall short at a higher level, which it just did here. And I actually jumped out for a small gain. And then it's either going to bounce, like I said, or it's going to start to power down, okay? And it's going to take out those lows and go straight through that. So like I said before, you want to see a push into a level, it starts to bounce back, gather some more momentum to push down further, or if it starts to push in again and that momentum's not great enough, you're going to get buyers starting to step up to the plate and hold it up at a higher level, okay? So there's sort of two things we're trying to weigh up, and sometimes you get on the wrong side. I think yesterday I actually got on short on the Nikkei when the Nikkei was starting to get supported, and it did flush down. It gave me enough time to start assessing the trade. When I did get short, the market was looking short still. It was still holding lower levels, but you can see it kept getting popped up. So it was giving me a few indications. Well, look, if this doesn't go soon, I'm out. I'm going to bail at a small loss. But luckily enough, it actually did go down. I took my gains, and then sure enough, it did go a bit lower and then bounced straight back up again. So it did give me the indication of, maybe you're on the wrong side. You're not seeing what you want to see. The price action is not playing out to plan. It doesn't have to be perfect, but at least it needs to start playing out to plan. If you start breaking back up again, taking out highs, that's not what you want to see if you're short, and vice versa, taking out lows if you're getting long. Okay, so what we're seeing here, the price action did go down. This was the open of the index at 12:30, spiked down, but then it kept getting held up. So you're taking out this low, and then a bit further on, it retested that low. So as soon as we got this kind of action, push down, pop up, push down, takes out that low, starts to pop up again, and it pushes down and starts to hold this level, that's ideally what you're looking for, okay? Because we start to hold up off that level, you got 3 touches, okay? That's a triple bottom, whatever you want to call it. Even got to flush that level, and it starts to hold up. So that to me is a slightly higher low than that level. So what I'm doing is piecing together the puzzle. I'm getting that evidence to go, okay, maybe I want to start to look at getting along in here, okay? And then I'm looking for my entry setup. This is basically that. It wasn't in here I got long, it was in here. So what I was looking at, and I've done another video on this, the 3 candle setup, and this is just this is the way I would get into index trading, into the markets. If I'm scalping or if I'm trying to get a position on into the indices. But what I'm talking about now is more planning out. So we're not talking about the entry itself, we're talking about the planning out and putting together the pieces of the price action of the structure off those levels, those key levels, and why you should start to build that plan, okay? And what you should know coming into the session. So all you really do know coming into the session is that you've got your levels, you've got your fuel built up on the long side. Now, if it's built up like we just mentioned before on the Hang Seng, it was built up all the way on the long side, there's a chance that it could roll over. Now, if it's not going to roll over, what's happening there? Okay, we start to get more evidence as the session progresses. Okay, and as we get more evidence, we can start be biased to one plan or the other. Okay, and we've got that plan that we wrote down before. We prepped our market, and then we just start to follow that plan, okay, and start to keep those biases out of your head. Just start to read the price action, and everyone's guilty of it. I mean, I'm guilty of trying to second guess the market. I can still do that. You second guess the market. It's going down, so I get into a short and turn around and get squeezed out, and I think it's still going down, so you get squeezed out. And it's because I'm guessing. You're not waiting for the trade to come to you, okay? And I think that's the important fact. The trade will come to you. If it's there, it's there. If it's not there, it won't show itself. Okay, if you can think in simple terms and keep those emotions out as much as you can, or keep those emotions in check. We'll never keep them out completely, but keep those emotions in check, then I think that would be very beneficial to your trading. So after that little rant, we've got the price action here. It's starting to build here, and what I've got here is my 3 candle setup. So I've got the pullback, the minor pullback to the EMAs. I've actually pushed above the EMAs here, which is I love. You've got this price action from below. Okay, you've got the failure to continue. You've even got the flush and a higher low. So there's 3 points, which is ticked off to my plan quite well. And then I've got the market starting to expand. So you've got all these shorts in here, shorts in here, shorts in here that have to turn around and get squeezed out of the action. And then you're going to get longs that are going to join in the fray off a key level. Okay, joining the action. So you've got expansionary candle here. First pullback, I'm looking for that low. That candle's made the low, the red candle. made a slightly lower low than the previous candle, and then the very next candle has broken my two levels. Okay, the two previous candle highs is what I'm looking for. So this is what I call a HH2. Okay, I should just draw that up actually. Okay, it's a bit small, but you get the gist. Okay, HH2. All right, so that's what I'm looking for. Now, if we go along, we see quite a few of those. Okay, so this one, it did pump up. I think I got out just here and then called it a day, and it did actually come back. But later on, you can see there's quite a few more. I mean, you can call this a HH2 depending on how much risk you're taking on that trade. Break the top side, stop us below. It did kick on. We didn't come under pressure. You've even got this little pullback here. Okay, you got a pullback and takes out the two previous levels, or you can even probably take that to the same level off a slightly higher level. You've got, this pullback here. So you got a setup there. So you can see that if you start taking a bit of a look at it, you've got quite a few setups and you've got confirmation because it's bouncing off those MAs. Okay, you're coming from a nice bid zone. When you're going off a bid zone or a support zone, you could anticipate that the market's looking to the next resistance zone, which we've got right up here. Okay, so even if you rode the trade up to here and you called it a day, that's fine. All right, and that was a good, taking it, say, somewhere from the entry there, which I took it to, up to there was 188 points. Okay, no one could laugh at that. All right, so that's ideally what I'm looking for. So I've got my levels in place, I've got my plan in place, and once I start to see that confirmation according to my plan, I'm looking to see the confirmation build or the evidence build. I'm looking to use my entry criteria. Okay, everyone could have different entry criteria. I've got mine. You start to implement that entry criteria if it starts to play out. So that's kind of the last key to entering a trade is your entry. Okay, and then once you've got your entry, commit to the trade, believe in your price action, and hopefully it's right. Not always going to be right, but majority, if you've done your back testing, it will be right. And just go and bid to offer in this case, or potentially offer to bid. Okay, so what we've got here a bit later on, we've got some really nice trades to the downside. Remember, we've already got that first leg up. We've had some consolidation. We've got this leg up from the day. Okay, then the market started to break to the downside. It's taken out quite a few little key levels. You've got a key level here. Whoop, that's not it. You've got a key level in here, so anchor to the uptrend, broken that down. So we had a good push down. The market's come back up. It's consolidated all the way through here. And then you're starting to get breakdowns. So what you've got once you get to about here is what I'd be looking for. I mean, you could trade off these lower highs as well, because what you've got here is a double top, or we call it an RTF. That's what I term as an RTF. Just try to draw that up a bit bigger. Okay, RTF there. Whoop. Hopefully it stays there this time. RTF, retest fail. Okay, double top, triple top, whatever you want to call it. But we call it a retest fail because it's got same terminology for different scenarios. All right, so you've got markets pressed up, your first pullback, the market's popped up, tried to go, consolidate, tried to go again, the retest fail, and then it started to fade after that. So anyone who's been buying it long through here, or even up here, or even before that, is going to have to start thinking about getting out. Okay, and that's what we want, because we want to see that everyone, all those longs that are built up, are be put under pressure, and they have to start to sell back into the market. And that's what that price action is also going to do, is cap any more longs. You're going to get some stupid ones, unfortunately. We've all been there. Are going to still jump in long, but it's going to cap the amount of longs, and it's going to add to the amount of shorts that want to come into the market and drive the market down. Okay, so you've got that action, your retest fail. So after that, we're basically looking for a shoulder. You could have traded, in here, according to your plan, you got some shorts in here, and then you can see the market just keeps dribbling over. Now, bigger price action, you've got this leg down, bigger price action, you've come back in, you've retested from beneath, it started to fail again, and you can just see once that the market started to kick off from those lower highs, it really started to power lower. Okay, so once you start to break here, break back into that zone, okay, and start to react down off it, okay, that's a good indication that, okay, there's going to be a lot more buyers that are loaded up. They're going to have to start really seriously thinking about getting out if they're not already. Okay, so that was on the Hang Seng. Let's walk away now that, and we'll we'll look at the Dow. Okay, same scenario. So what I've done here, I've marked up a few key levels. We've got a key level across here of support. You know that the market just drove down to support. So in that session, it was quite a negative session. The market powered down to support. And then you've got that level start to hold. Okay, it's held. And how do we know it start to hold? Because it's broken the anchor to the downtrend. That's it. That's the move down. That's your last anchor to the downtrend. You've got anchors in here as we're moving down. Okay, you can see the build, lower highs, lower high. That market retested the lows, held, started to break back up and break that anchor to the downtrend. So you could be looking in here for a long, but I'd ideally like to see a bigger push down. If I want to see these shorts squeezed out, I want to see a bigger retest, something that we got on the open of the session. Okay, so this was the open of the US session. It was right at 12:30. It drove down into that support zone. Remember, we're in a we're on a 5-minute chart here, and you've got that was the most recent high, okay? And we've got the same sort of scenario. We've got retest here, an RTF there, then we've got an RTF there, okay? The RTF there has led the market to get squeezed on the open, squeezed out these longs, and then it's turned around and traced. As soon as we get that sort of a squeeze and this level holds again, that to me is a move down, a bigger move up, the start of a bigger move down which fails, okay? We're not talking small moves like this. This is a small move down, small move up, small move down, and so on. We're not talking small moves. We're talking a bigger move, okay, on a more of a macro scale, okay? So you have to realize that's the same thing on the way down here as what we've seen on the bigger scale, okay? And that's what we're just going to keep in the back of our mind. We're not getting too myopic into the smaller intricacies of that trade. We're looking at the bigger picture and we're trying to trade off the intricacies, if that makes sense. Okay, trade off the bigger picture and try to trade off the smaller picture timeframes, but trading off those bigger picture moves. Okay, so we'll go to the 5-minute here. We'll just see what played out. So we've got the markets. We've got our levels in place here from the market open. We've got a key support zone. We're about here at the start. It's had an RTF here, and we've had an RTF here. So we're sort of in no man's land at the moment, and just want to see what plays out at the start of the session. We know what happens on the 5-minute. We actually do know what happens anyway. But what we're trying to see is we know that support zone, okay, it's going to fail. It's going to go through that support zone. If it starts holding up off that level, what's going to happen? There is a chance that on a bigger picture, we're going to get a bigger higher low, okay? And this is just a flush, which it turned out to be, okay? The market's powered down. What you've got on this really small time frame, another RTF, okay? So really take notice of those RTFs. I think they're a very big and very powerful tool to know when the market's changing, especially with regards to the bigger picture, okay? The bigger time frames, what we just spoke about. So we're looking at a 1 minute. The bigger time frame was the 5-minute. Okay, we're trading from the one. We've got the bigger time frame, 5-minute, and then the 30-minute levels as well on top of that. Okay, so you can see markets push down, RTF here. RTF means chance of a reversal, and together that level, the fact that it didn't get into that support, is the chance of a major higher low. So to me, I'm going to be biased up. So what you're seeing here, you've got some really early trades, and remember they're still early. You're above the MAs here, but the MAs are still technically down. You've just pushed back up above. So there is a chance to trade in that off that higher low with regards to the open there and with regards to this big zone here. But remember, you haven't really, this level up the top, the RTF from earlier has not been put under pressure just yet. Okay, we're anticipating that it could because we're getting long, but it could fail. We could have failed here and rolled straight back down again and then taken out this low, and your trade's failed. All right. So you could have traded there. It turned out all right. You could have kept going, and you could have taken it sort of a bid zone, which is here. It's going back to the offer zone, which is this top blue line at around 34,540. Okay, then it starts to roll from there. You go, okay, we've probably taken that. We've taken that trade off potentially. It's come back. It's pulled back, and we're looking at the bigger picture. All right. So the bigger picture for me, you've got this zone congestion in here. You've got a pop up, a pullback, and then you start to hold in here. Okay, you start to still hold higher levels. You're taking the break at the top side. You've even got a retest, and it's continuation. Okay, through that zone there. Now, remembering what we said about the bigger picture, this here is all part of one leg, and then we've got failure here, and that's the bigger picture retest. Okay, so if we're looking again at the smaller time frame, we're trading from the 1 minute, we start to see, the bigger picture is we've got RTF here. We've now got a break of this RTF. So for me, we've got to be biased up on the bigger picture from the 5-minute chart, and you're looking at your 5-minute time frame. This might just be a pullback from the 5-minute, and then you're looking to, this is retesting, starting to hold, and then you're looking for longs, okay? You're looking for longs and you're just trying to trade it from your 1-minute chart. You start to pick them out. You've got nice little high, low in here. You've got setups in here. So they're the sort of zones you want to be trading off, okay? And you can see that really started to play out quite nicely. All right, we'll get on to the last one now, onto the yen. I also keep saying the yen. The Nikkei, not the yen. I've done the same sort of thing here. We're on a 5-minute, we're on a 1-minute chart here. But what I've highlighted is where I see the main bias. Okay, the main bias has obviously been up. All right, you've got, and this is a really good example of when, traders all at the same time are getting out of trades and they're flooding to get out. They're flooding for the same exit, okay? And not everyone can fit through the same exit at the same time. So someone has to wait and get a worse price in this case. I guess the analogy is, so you've got markets powered up, okay? A lot of longs built up, then consolidation. These longs, anyone sort of below that consolidation is not put under pressure. They could hold, If you're not me, you could probably hold it. All right, I would have got out of that and probably re-entered if it started to confirm again. Okay, but that's just me. If you're a longer term trader, which there will be a lot of people that do that, you would have held through that and then you've held on. Okay, so built up some longs, probably built up some more longs through there, and definitely built up some more longs a bit later on. So you know, just from that picture, there's a lot of juice on the upside that could get squeezed out. Now, I've got my levels marked up. I've got a zone through here. Okay, you can see it's pushed up and through, retested it, held, gone again. You've got another level through here, popped up through the highs, chopped around through the highs, pushed up, retested it, and carried on and did the same thing again. And I've just marked up the high as well. Okay, the high for the session. That was the high of the night coming into the close early hours of this morning. Well, in Sydney time anyway. Market's pressed down. Okay, then it's opened up. It opens up at 10:45, I think, and then the underlying market opens at 11. I think it's got a 15 or 20 minute open on the Nikkei, a bit like the ASX. But you can see the market's popped up at 10:45. It started to chop around. It's made a little minor high up here, and then what we've done is push down, flush that high, and this is right on the open at 11 o'clock. So it's kicked off, flushed the high, and started to sink from there. So you know what you're seeing, you've got a bit of evidence, you've got all this juice. So you go, okay, if we start to fail, this could really get a go. This could really start to move on the downside. Okay, we're just anticipating that because ideally we're trying not to go against the trend, but we're trying to pick those areas when it starts to roll over, when the bulk of the action is starting to become below the MAs. Now, it's going to be below the MAs in the 1 minute time frame first. Potentially the 5 minute will be below the MAs, but ideally it's at least flat. The MAs are starting to flatten out and they look like they're going to roll over. And you're taking a nice early trade when the 1 minute started to roll over, okay? Let's just check that actually. Let's just have a quick look. Okay, actually the 5 minutes rolled over as well. So you know 5 minute MAs are down, EMAs are down. Go to the 1 minute. The 1 minute EMAs are starting to roll, well, they are down anyway. And they're just chopping around here. The bulls are trying to put up a bit of a fight, but they start to give way, okay? So you can just see, once you start to realize that, okay, the bigger picture is a lot of juice, a lot of fuel on the upside, potential for them to get squeezed out in the market to sink, and we want to be biased short. Not only that, we've got levels that are starting to get broken. We've started to come back into this zone. We could be doing the same thing we did before here, potentially here, you know, like we did in here. We're going to hold and flush straight back up again. But the fact is, you've got an RTF there with a washout, we call it, okay? Washout of the highs, finish back below. That's a very big sign that the market doesn't want to go up. That's just a stop hunt. Attack the stops above that level, flush them out and turn around and retrace that move. So that's where you want to start to get in short, okay? That's an RTF below the highs after breaking through this level through here, okay? So there's a lot of things adding up, and we know the potential that could be for this trade, okay? And as it played out, you could have traded right off this. It's the same sort of LL2, yeah, LL2 off that, okay? You've got the market's made that low, it's come back up, and it's taken out. So the next two candles just popped up here. That next candle, green candle, and it's taken out that low. So you've got a little lower high. It's only a minor lower high, but you are below the EMAs on the 1 minute chart. You have got your flush, you have got your RTF, and that's confirmation that even on that lower time frame, we're starting to get through this level, okay, at 28,294. All right, so basically from there, you're just riding it down, okay? If you can manage your risk, okay. If you want to take it some off into the next level, that next level from entry was roughly, it's only 30 pips. If you manage to hold it through there, then you've got an entry, you know, the next level down, you're looking at about 87 points. And if you manage to hold that, then at least you got out, you know, somewhere about 190 point runner on that one. Okay, before you really got any pressure. And by pressure, you've got that held, that was a minor pullback. Then you start to get expansionary candles down and a bigger pullback. Okay, then you've got your high low just in here. So that's kind of a bit of an exit for the door there. So even if you exited that full position, you took it there, you exited there, you've got somewhere around, let's just say 130 pips, okay? Now, easier said than done sometimes. May not have traded that myself if I was watching it. I may not have held it myself if I was watching it. But that's it. I mean, the aim is to get in the right zones, so at least get in the trade nice and early. It starts to play out according to plan. If it doesn't play out to plan, then you have to start thinking about managing that trade, okay? If it doesn't start to chop around, you get this move down, it starts to react back up, then you've got to have an exit strategy as well. And it could just be the reverse of your entry strategy, okay? And then what you're doing there also, you're still taking into account the levels, okay? If that level broke here, it doesn't mean this level is going to break, okay? And vice versa, if that level and that level broke, doesn't mean this one's going to break. So you've just got to say it's coming into a level, what's happening? Still strong move down, okay, bang. And that all comes down, the size of that move comes down to the amount of juice or fuel that was built up on the long side previously, okay? So hopefully that's pretty much, that can give an idea of how I start to plan a trade, how I start to put together a trade idea, and set up my trades, okay? I'm looking for confirmation, I'm looking off levels, and I'm looking for, I want the market to show me the trade as opposed to me trying to guess the trade. Now, it doesn't always work that way. I can have the best plan and execute it poorly, okay? That can happen. That's in trading, but the idea of consistency is to do the same thing, repeat the same process, and repeat it as many times as possible and keep out the stupid trades as many times as possible. That way you increase your consistency. If you're doing dumb things all the time and you're prepping it really, really well, you're just trading it badly, then you know what you've got to work on, okay? And then you can go put that in your journal. I think it's very important to start journaling your trades, start journaling the price action. Like, for example, I've got this drawn up. Even though I didn't trade it, I will take some notes and I'll put that in my journal, okay, for later, because I can go back and relook at that stuff. If I'm having a bad day, bad session, I can go and relook at it. Try to get your mind in the right process again. If you're straight off the path, I guess you can say. Okay, so that's what I want to get through to you. Hopefully you enjoyed that. If you did, it'd be great if you can leave us a like, subscribe to the YouTube channel. A lot of information on there. Also take a look around the website. Okay, a lot of educational material I'm going to be put on there, just changing it around for the members area, making that a more educational service there, just more bits and pieces. So things like this I'll be putting onto there, not so much trade alerts or anything like that. We'll keep that for the Discord channel. Okay, so the idea is to put everything with regards to trading into the Discord channel for subscription for members of the website, which is www.tradethestructure.com. You jump on the website, you can subscribe, and then you can email me to Discord or email me to tradethestructure@gmail.com. I'll spit that out, and I'll give you a link to the Discord channel where you can actually jump in there if you like. If you're not already in there, but you want access to the members area, just let me know, and I'll give you access to that. Okay, and then from there you can actually put in some queries if you've got some queries on charts or anything at all. Okay, I'll answer those within the members area, and the rest of it is just for general conversation. We've got a good little community in there. It's building. I can really see some developing traders in there. It's really, really good to see. Okay, it doesn't even help them; it helps me as well. Okay, it's always good for my confirmation that I'm doing the right thing. For example, if I'm straying from the path a bit, it always helps. So, yeah, jump on board there. If you want more information, like I said, give me an email, tradethestructure@gmail.com, or take a look around the website, www.tradethestructure.com. Okay, thanks for joining me, guys. Speak to you soon.